Good morning, everybody. It's Tuesday, May 18th. Just going to run through the morning charts of gold and the SP 500. This morning, futures traders would have had their protective stop triggered for the SP 500, and at the open, ETF traders will most likely have their stops triggered as well. I'll cover that in just a minute. But here we have the Kitco gold overlay chart. Yesterday, we saw gold grind lower, put in a little bounce in the morning, and then it continued to push lower with a two-wave down here, and it just consolidated through the night. This morning we're seeing a push down again as well, and we've gone through a couple of key minor support levels around the 17 level, which was tested yesterday. So once that broke, we saw some selling. I think when traders wake up and see gold this morning, I think we might get a push lower, hopefully down to about the 1200 area, and we'll see what the volume looks like, what the rest of the market is doing, and we might possibly have we'll start to scale into gold, take a small position, and add more on weakness. But we'll take a look at that as the day goes on. But that's what I'm looking for gold right there. If we jump to the daily chart of gold, we can see we had the previous high broken, and we saw the surge through it, and now it's pulling back, and I have a feeling we're going to test this this 1200 level. We might go a little deeper and test about 1195 area. So we'll see how it pulls back today and go from there. We have a long-term cycle about to go down. We've got a short-term cycle about to bottom, so we're getting mixed signals. We're almost near a key support level. So it's a tough call right here. I don't want to jump in front of gold because we don't want something like this to happen over here. This once you get these strong climbs up, once the majority of people see what's going on, they all bail out to catch a move. So we don't want to see a drop straight down to the 1150, 1165 area, which would be a pretty key pivot point around here. So we don't want to jump in too early in case for some reason there is a larger sell-off today. We're just going to kind of watch it, let it unfold. I don't feel as though there's a huge rush to get into gold. It's already made a huge move. If anything, we might get some sideways motion for a while, providing us with some more low risk entry points to get in for a larger move up, which I think is due for gold. So that's what I see for gold. As for the SP 500, yesterday we had a nice move down. This morning we're seeing the S&P move up. The charts are giving a bunch of mixed signals, and right now we've got these trend lines all crossing. We've got this reversal candle here. We've got some cycles going down, short-term cycle down, long-term cycle down, intermediate cycles turning up. We're trading pretty much at a resistance level right across these lows here. So we've got a bunch of mixed signals, which is why we're now back in cash at that level, because we're at we're trading at a level where you don't know where it's going to go. It's best to take your money out. It could pop up very quickly and we'd give back all of our gains, or it could continue lower. But right now we are sitting in cash with the S&P 500 because of this. It's complete mixed signals. It's best to stay out of the market, let it do its thing, and we'll wait for another setup. So that's what is looking for the S&P 500. If we just zoom into the 60-minute chart here, you can see over the past few days now we're trading at this this pivot point. A key support level will be actually through the middle of this noise around the 1155 area, which is where we first took our initial profit. We scaled out of a position right here. It dropped down to this level, tried to hold it, and then gave way. So this is where it could potentially rally up to, and we might actually have another short signal to catch another down wave. But right now it's just all mixed up. So we're just sitting in cash, waiting for another low risk entry, and we'll go from there. Anyways, talk to you later. Bye bye.